Kevin, what's under the hood at Tesla and how grim is it?
Yeah, I think the issue there is, or what we're concerned about is how real is the sustainable demand going forward. So, there's a lot of noise in there with capital raises and Elon Musk's personal situation. Also, though, with there's enough capital there to get them through the extended period. The question is demand 300,000 units a year? Is it 500,000? Is it a million and growing? And that's really where we're unsure right now.
Okay, let's take the partial differentials of revenue. Does lower price sell more units?
Well, it hasn't, right? And I think you have to keep in mind that the federal tax credit has stepped down. So while at the higher price points, you would say, well, that $3,750 doesn't really make that much of a difference to the wealthy that are buying six-figure Model S and Model X. Maybe it makes more of a difference down at Model 3 because that sequential drop-off in demand or in deliveries from the fourth quarter of 2018 to the first quarter of 2019 was significant. It was more than any other automaker. There's always a January hangover, but theirs was way greater than normal.
Kevin, if you look at the pre-trade, it's dropping 4.4% Tesla because of two analyst notes. How unusual is it to lose that much market share or that valuation just on analyst notes?
Yeah, and the interesting thing there is that there's probably a lot of investors that have a lot of profit already locked in, and as you see the stock tumbling, you just wonder what the reaction is going to be. How far will this come back down? And if you're in that early IPO stages, and when it traded under $100 for a very long time, and then the share spiked on the Model S deliveries, and then again on the Model 3 deliveries. And you just wonder those people that are in really low start getting out, the big funds start getting out. You're not going to buy back in this 180. If it's overvalued at 380 and 280 and 180, you're probably looking at a worst case scenario. Or you're going to have investors that are looking at it saying, I was buying in when it was above $200, $300, and I'm going to hold on now to see how this plays out because I'm underwater.
Right, but one of the things that one of the analysts is saying is, the automaker cannot avoid the trade war effects. That must be true for, of course, all of their competitors.
Sure, yeah, and we've said this all along, too, is that probably the worst case scenario for Tesla is to be considered or valued as a legacy automaker. It's been positioned as a technology company, and when you start to see normal automotive factors affecting the company, that's a worst case scenario, right? They want to be different. They're a disruptor. The things that affect or legacy automakers are susceptible to are not for Tesla. And when you see that start to happen, that's probably the biggest concern.